Let's take a look at some legacy charts for Brave New Coin on this Thursday afternoon. We've got the VIX in the line chart here, BTC in the price chart up top on the weekly, and then 30-week rolling correlations in the fill charts below. DXY, gold, 10-year treasury note, SPX, NDX, and Nikkei 225. Now historically, when VIX rises, we're bearish crypto. And also historically, VIX sits below 20. Usually 2025 is the higher end. 2008 and Corona were the biggest spikes on record for the VIX. Where it topped out somewhere 80, 90s, which was incredibly bearish for everything, which tells you crypto maintains a healthy risk on environment when it's bullish, and when things are risk off, we aren't so bullish. And then you can use that narrative and frame it around everything else. We like to think it's a hedge against XYZ, but in reality, it doesn't necessarily behave that way, at least in big volatility spikes. Another thing to watch is DXY, because if DXY is bullish, we probably aren't as bullish on crypto stuff. There hasn't really been a strong correlation with gold over the years, 10-year treasury note, kind of all over the place. Really, most recently, the things to watch are stocks and equities, because those correlations have been extremely high until very recently. So currently those are decoupling, and the gold correlation is oddly still negative. I don't know what sort of signals to even glean from this, because everything is all over the place. Dixie's zeroed out, and we're actually most correlated with the Nikkei and the 10-year treasury note. But for me, the most problematic thing is to see a bullish DXY, which I haven't changed this chart for weeks. Looks the same thing. Been saying the same thing over and over and over again. This should be bullish. This looks bullish. This looks bottomy. That is bearish for crypto. If this thing reaches for 96, 97, it may take 6 months to do that, but that is not a journey in which BTC is bullish. On technicals in a vacuum, this thing continues to break up. The cloud likes 96. The measured move is 96 plus. The table is set for reversal. In a few weeks, we're going to see a bullish TK cross here to further the bullish trade, the edge-to-edge trade to 96. So all that is in the face of an infrastructure bill, in the face of rates. You know, there's a lot baked in here. It's an index. It's relative to everything else, mostly the euro. So it is kind of a partial race to the bottom. So this does not represent purchasing power. Purchasing power will continue to erode over time, most likely. And that isn't necessarily baked in here. So it's important to know that that's an index, right? It's not just the dollar purchasing power. If you look at that chart, it looks like it's going to negative 1,000. Gold is still in a weird sticky place. Bearish TK cross back in the cloud. The cloud like 16, 17, somewhere down there. 1680, whatever it is. But the TK cross is still very spread apart. When there's this massive volatility that's super quick, the TK cross takes time to get back down to price. And we can even see similar examples to this here. In 2012, we had a bearish TK cross, price was in cloud, but price was so far below the TK cross, this thing took time to actually play out. So I still expect this to play out bearish in the current state around 1800. And as long as we're in the cloud with the bearish TK cross, you can't exactly stay bullish. Now you could do a similar thing like 2012 again and get bullish when this thing pops up above the cloud, if it does with a bullish TK cross, but at that point it's probably in some mega consolidation zone, and this thing was kind of a choppy mess. It clearly is not making higher highs anytime soon. It would have to make a new all-time high basically, past 2,000 plus. So it's just, there's no trade there for me as a trader. This was a great setup that failed. Ascending triangle had lots of potential for continuation, coming off of white coffee and accumulation. Currently it's on its last legs here, above the weekly cloud, but just above the weekly cloud with a pending bearish TK cross. So it's not over yet for silver on the weekly, but it's getting close, certainly. SPX, just, what do you say? I mean, it's new highs every other day, it seems like, right? How long can that go on? Can that go on for another month? Another quarter? Another year? I don't know. If they taper, if things get wild, then the market will get very angry very quickly. It's like musical chairs. And once the music stops, this thing is going to correct viciously certainly. I mean, it's up just a crazy amount, even in the past 8 months, percentage-wise. This is not a speed at which is able to be maintained continuously without a lot of juice, a lot of gear, a lot of roids from the Fed to keep this thing up. The cloud likes sub 4K at 3800, somewhere down there as far as a level. Currently, that's going to change every week. It's going to move up slightly, but if this thing flattens out at any point, that's where we're headed. Is to the Kijun, wherever that is at that point in time. NDX very similar. You can see it's starting to slow down because the Kijun's catching up here finally. If this catches up and gives you a TK cross to the bearish side of things at the top, that's the best thing you can ask for. That's telling you, okay, party's over. If you were long from the Corona dip, if you were long from the bullish TK recross, whatever, at any point in time this is bearish, and the TK cross side of things, then it's all ogre for the NDX. The bad part about this is crypto will not be saved from this. Crypto will pull back with both the SPX and NDX, most likely. Very much so in the near term if they pull back. We'll see what happens in the longer term, but these will not be bullish for crypto, certainly. Nikkei is in a nice falling channel to the Kijun. I actually think this chart looks reasonably okay for some sort of bounce before end of year. What you don't want to see here is a Kijun failure and then a pullback to 2350, whatever the 23.5, whatever the flat Kumo is here, because that's the 50% from high to low. So if this pulls up and maintains that high correlation with BTC, then we can get more bullish, which is one reason I've continued to watch it. As far as the grayscale stuff, still holding a negative 13% premium on BTC, 4.6 on ETH, the negative 30 plus on ETC, and the LTC premium finally decaying to 0. BCH probably goes to negative 10 plus eventually. I think the biggest news this week is that Morgan Stanley reported holding a large amount of grayscale BTC. So still worth paying attention to this, still worth paying attention to the premium. What's going on here? For custody reasons, regulatory reasons, a lot of entities prefer this or can't hold other stuff. Just worth keeping in mind, even though there's a discount here, or maybe they think this discount is going to close to parity, assuming ETF is coming eventually. I don't know, but that's something to keep looking at every once in a while. BTC futures are rolling over this week, so tomorrow, along with some options tomorrow as well that may have a volatile impact on price as it usually does. We've seen continued slowing and weakness into this rollover, so it's for me, I'm not optimistic this thing just makes new highs all of a sudden. I think this is a wedge, rising wedge. I think it breaks down. I think 3,800 or lower is certainly a better place to buy than here. Just needs some time. Moving on to legacy stonks. GME up big this week. Triple bottom, inverted head and shoulders on the 12-hour, the daily, still below the cloud. I guess if the setups are decent for this on lower time frames, it's worth trading, but I don't think I would ever want to buy and hold stuff like this. AMC, this falling wedge, broke up this week as well, very similar to that GME candle. Those two like to move together these days. Coin, bunch of nothing, sideways, nothing too exciting going on there. Robinhood still below 50, 51, just unexciting to me. Potential multi-day inverted head and shoulders on this, but until it's above 51, it's just probably just ranges. MSTR looks not great on the lower time frames. Potential head and shoulders here as well. Now it had a similar type of structure in early 2021. Saylor just announced he bought a bunch more BTC with a 45K average. So I don't think this thing moves on its own anymore unless BTC moves. If BTC moves up, this thing will move up with it, but it's basically a BTC ETF at this point. Until it's above 807-ish, 800, whatever that is. Probably just ranges indefinitely. Tesla ranging indefinitely. I was bearish on this, didn't break down. It looked decent maybe last week or the week before, and then didn't break up. So I don't know. I don't trade this actively anyway, but thing just looks like a mess at this point. Square, just sideways at the top. Nothing too exciting, no setups pretty much anywhere. Everything's just kind of sideways. Even in crypto, a lot of this stuff's just kind of unexciting. GBTC had that golden cross a few weeks ago now, I think. Currently kind of triple topping, rising wedging, you know, head and shoulders vibes here on the RSI. Doesn't exactly look like continuation is imminent in the near term. And ETH as well, just sort of sideways, right? There's nothing super exciting going on anywhere. And I'll mention the commitment of traders report. This is the positions of various entities who trade on CME. And the short side of things is rising again. So this is very likely not just net short positions, but hedged positions. So to see this rising for me is actually more bullish because that means they have a long position somewhere, most likely. The hedge funds do. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio. I trade for Techemy Capital on Enzyme Finance non-custodial portfolio management tools where you can send ETH or USDC or just watch what I'm doing. You can see AUM, allocation, performance, all the trades down here in the trades tab, deposits, withdrawals in that tab. And you can see currently I'm sitting in mostly stablecoins here, 75% stablecoins basically. And as BTC and ETH are looking weaker, I probably jump out of these completely here now and then re-add lower. Ideally, we get some pullback here on BTC and ETH. That's a dip worth buying, basically, is what I'm looking for. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.